Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin Reed, and today we had a red day in the market. And I'm going to give you what I believe is going on. So before I get too far into it, you guys make sure you like, subscribe to the channel, hit that notification bell so that you get notified when I make videos. Right? So let's talk about it. Today, the markets were red. They were actually red yesterday and today. And I'm sorry I didn't make a video for you guys yesterday, but hey, I had a long day, and that's how it goes sometimes. But I'm here tonight to make up for it. I believe we're going through this red day due to it being the end of the quarter and people trying to rotate their funds. Also, the job labor reports that I told you guys about coming this week. So those are being talked about tomorrow with the Fed. Depending on those reports, we could see a negative or a positive catalyst for the markets, right? How's unemployment going? How are jobs? Income and all those types of things are going to be discussed on tomorrow, and that affects the inflation numbers. How much are we going to increase the interest rate hikes again, and things like that. So that along with I've been hearing a lot of fears on recession and just speculation right now on a recession coming. And we all know, as of right now, that a recession, we talked about this, we defined a recession, but a recession usually takes 11 to 12 months after it's been identified, right? So it has not exactly been identified yet, but people are speculating, and that speculation alone creates a lot of fear and uncertainty. So the markets react to that. You guys know that, right? We look at our fear and greed chart pretty much every time we shoot a video. So that kind of reads, okay, the fear and greed and how the markets react. And we're going to actually check that out tonight to see how the markets react to it. Before I get into it, I want you guys show you guys this article that we have here, right? Stock futures bounce as investors assess start of new quarter bond market recession indicator. You see that? Recession indicator. So that right there immediately negative catalyst, fair uncertainty and doubt into the market, right? So stocks rose early Thursday as investors assessed a new quarter of trading and a troublesome bond market recession indicator. Investors were also awaiting the official jobs report for March, which the Labor Department will release at 8:30 a.m. Eastern Time on Friday. So we're going to get that tomorrow. Dow futures gained 90 points or 0.3%. S&P 500 futures added 0.2%, and Nasdaq 100 futures rose 0.3% to kick off the first trading session of the second quarter. So this is after hours, right? Because we all know that the market was down and during the market, right? So you guys, just so you can see it here, we all know the market was down. So this is now after hours. We see some movement up, but we don't really know how long that's going to persist. We can see that as a dead cat bounce or just something potential fake out. But the way as heavy as we came down, which I'll show you for today and yesterday, it doesn't really, the small percentages that they talked about there does not make a difference for us. The Dow Jones Industrial Average slumped on Thursday to close out the first negative quarter for stocks in 2 years. The first negative quarter for stocks in 2 years. So bearish market. We know we hit that bear market. We know we hit that correction. So this first quarter, crazy. Lowest first negative quarter in 2 years, you guys. So you gotta take those signs, right? Take those signs. Should we be trading in those markets? Should we be trying to make money in these markets? And I can tell you, it has been extremely hard to make money. We've been doing it. We've been managing to do it. But the gains that we're seeing are nowhere near what people have seen in the past years, or what we could be seeing if it was able to read this thing right. So we saw this thing on a bull run for almost 2 weeks straight, and now all of a sudden it come back down 2 days straight. You can't really predict this market, and you should not try to predict this market. All three major averages posted their worst quarter since March 2020. The Dow and S&P 500 declined 4.6% and 4.9% respectively during the period, and the Nasdaq dropped more than 9%. Stocks did a stage late quarter comeback in March, however, after sharp declines from rising interest rates and inflation marked the first part of the year. So that's what we got, right? That's what we got so far. Let's check it out. The Dow Jones is down 1.56%, S&P 500 down 1.57%, Nasdaq down 1.54%, and the Russell down 1% for today. Worst quarter since March of 2020, guys. Worst quarter. So we got to keep that in mind. And let's see, right? This thing only shows us 1 month, and we've actually made a recovery in 1 month. Let's check out our 6 month. We made a 4% recovery, so we got out of that bear market territory, and we're actually up 2% for the past 6 months. Now for the past 3 months, seeing that that'll be January, right? Our high was here at 36,000. We actually came down a pretty good bit, but we made some recoveries. We made some recoveries from our high, right? And that's good. So that's just one thing we want to check out, right? Just seeing what we're looking like. Again, I want to show you guys the 6 month, but hey, this is good. 6 month, we're up 5%. Year to date, we still down actually, so that's terrible. But let's check out the year to date here. Still down. Only 5% though compared to the 10, 15, 20% that we were seeing. So that's pretty good in my opinion. 10% still in the Nasdaq for the year. 10% in the Nasdaq for the year. Now let's check out the Russell. 8.91%. So we could still be in correction territory for the Nasdaq and the Russell, meaning our tech, our high growth stocks, whereas the S&P 500 and Dow Jones are those, blue chip ETF, things kind of dwell in those realms. So we're still down pretty heavy in most high growth plays that we can just try and get into. Let's check out our fear and greed index. 51. Earlier when I looked at this thing, it was actually at about a 47. So it's made a move, I guess, in the after hours or maybe other countries trading. This thing was at a 47 earlier, and look at this though. But the previous close was a 53. So we moved more towards the fear side than we did towards the extreme greed side. So that shows people showing some caution, right? We were at that 53. Imagine if this was at 47. We see people making a big jump towards caution after yesterday's first red day in about a week and a half. And you still see more people going back towards the fear, more towards the uncertainty. Hopefully we come out of this. Hopefully the feds don't give us bad news that crashes the market yet again, and we can come out of this. If not, we got to play our role safe. Make sure you guys using your trailing stop losses, 5 to 10% on short-term plays. If you just love this company, continue to dollar cost average in, meaning you buy it over time. Buy it at those lows, buy it at those extreme lows. You see yourself down 10 to 20%, you buy more, bring your average down. So that's what you do for your short term, just growth plays. Set that trailing stop loss. Do not take major losses, right? Do not take major losses. So we're gonna check out our stock heat map, right? We know it's a red day. We gotta see those bad days with those positive days. Blue chip companies, major companies like Apple, only down 1.78% in tech. Microsoft down 1.77%. Google down 2.10%. Facebook down 2.41%. Amazon down 1.99%. Baba down 6.67%. As financials, even our financials took a major hit, which is surprising to me. Wells Fargo down 3.29%. Bank of America down 4.14%. We see Morgan Stanley down 3.18%, Goldman Sachs down 1.64%, and even energy's coming down. So you guys, I forgot to talk about this, right? I showed you guys this the other day, but look at oil coming down some more, right? Coming down. It is now back down to that $100 a barrel, $104 in Brent crude oil, $100 in WTI crude oil. So that is good, right? We should see gas prices coming back down. We should see those come back to some relatively decent prices, right? You got to keep your eyes on those. See Walmart down 0.63%, Target down 4.39%, Costco down 0.11%, really flat, and we just see energy down like everything else, right? So we got to now crypto still made some major growth over these past couple of weeks, but it's coming back down. So hopefully you guys taking some profit. I told you, always take those profits. Do not get caught holding. One thing I wanted to talk about was Luna. I saw Luna up to $110 today. $110 today. Did you take profit? Did you get in here at $55, take your 100% returns and get out? If you got in here at higher price, $94, $95, it was at $110. You should see 10%, 6%, 7%, somewhere around there. Did you take those profits? Do not get caught holding these bags on these short-term plays, unless you just have very long-term conviction. For Luna, we saw a max, I believe it was, for like 130, 120, 130. So you definitely should have cut out with some profit if you saw this thing go to 110. I took some profits off of it. If it comes that back down under $80, I buy more. If not, I stay away from it and I enjoy those profits. We see Bitcoin up to 44 right now. We saw this up to about 46, 47 this week. Ethereum is down 5.17%. Cardano down 7.26%. Crow down 6.35%. Formerly known as Crypto.com. Our Mana is down 11%. I hate to see that, guys. I hate to see that. Sand is down 12.46%. Again, I hate to see it, but both of these are some plays that I like for the long term, and I do not plan on letting those go anytime soon. That's just me, though. Hey, I can't tell you guys what to do. You guys have fun with it yourself. Shiba Inu back down 10.49%. Doge down 7.59%. Mainly, guys, we just gotta take advantage of these. Take advantage of them. Get in, get out quickly. Take your profits. Enjoy it. Sit back, kick your feet up, whatever the case may be. Definitely gotta catch them on the low side though. So crypto is also following the market. Who knows, the rotation, jobs reports, just so much going on right now. You got that fear and that uncertainty being injected to the market again, and we have to be careful of it. But again, you know what we do, right? We take advantage of the opportunity for to get these prices at these low discounted rates. We continue to dollar cost average. If they're under our current average, take advantage of the low price. Take advantage of the red days. Do not be afraid of them. You know how to make money on the way up or down with options. You put option, you buy a put option if you think it's going to go down. You buy a call option if you think it's going to go up. Also, I like this because when it comes down, when it cools off like this, that means I can see more growth. A lot of the times when they're going up so much, what's the top? Where's the ceiling? Where's the roof? Where does it peak out at? And we don't know that, but when it's just going up to the moon like that. But when things cool off, it gives you an idea. Okay, hey, I can expect to see it to go back here. I can look at the charts. I can expect it to go back there, and that gives me an idea, right? Okay, hey, it came back down here. The last time it came back down here, it shot up to here. But when it reaches new highs, you never know where it can go from there. So I like it when it comes down, it cools off like this. I like to take advantage of that, especially companies like Tesla, because you guys know we like to buy them cheap, sell them high, buy low, sell high. That's what we like to do. So again, I thank you guys for joining the journey to become wealthy. Hopefully y'all enjoyed tonight's video. Make sure you like, subscribe to the channel. Use those links to sign up for your broker. I got Webull, RobinHood, Gemini, Coinbase, and all those things in there. So you guys check out some of those links and get you some free stocks or some free crypto. Thank you for joining the journey to become wealthy. Y'all have a good night. I'll see you later.